Hi guys, welcome back to my channel. Kelvin here. So, the war has finally started. On February 14, Russia decided to invade Ukraine. All wars are bad, but you know, this war is especially bad. Why? Because even the Taliban has come out to tell Putin to stop his shenanigans. Now, even though we are not directly in the war itself, the war will affect us in one way or another, whether it's our stock portfolio, petrol, electricity bill, Chai fund, or even your shitcoins and Irene NFTs. So, in this video, I want to explain how will the war affect everything around you, like But before I start, I would greatly appreciate it if you can help to tap the like button because it will help out with the channel. In return, I will show you a cute kitten. Alright, let's start right now. Okay, here's a quick update on the war.
Previously on
Russia-Ukraine war. After Russia started invading Ukraine on February 14, things haven't been going so smooth for Russia. At the start, Russia failed to take any major objectives and lost many people. But Russia has a bigger army than Ukraine, and they will slowly gain control. Many countries have started imposing sanctions on Russia, including even Singapore. But the biggest sanction of them all is Western allies blocking some Russian banks from the SWIFT payment system. This will cause Russian banks to be disconnected from the international finance system and harm their ability to operate globally. As a result of all this, many Russians got worried and quickly tried to withdraw their money. Since the start of the war, Russian rubles dropped by almost 25%. The drop is almost as fast as my Tesla stopped dropping, while the Russian stock market dropped by like 52%. Obviously, Russia is not happy about this, and guess what? They threatened to use their nuclear forces, which is counterproductive for everyone. On Tuesday, Russia and Ukraine tried to have negotiations, but nothing has come out so far. So that's what has been happening up until now. Okay, now we are up to the latest episode of the Russia-Ukraine war. Let's talk about how the war will affect you, and me, and everyone else. First up, increase in commodity prices. Russia exports a lot of stuff, and by a lot, I mean a lot. In 2019, it was exporting about $407 billion worth of products. The biggest one is oil, then you also have gas, wheat, palladium, aluminium, and many more. In fact, Russia is the third largest oil producer in the world, right behind US and Saudi Arabia. Second largest producer of natural gas, largest producer of palladium, which is used for making cars, jewelry, dental fueling, and electronic components. Meanwhile, Ukraine produces about 70% of global neon gas exports, which is used for making microchips. So, as you might imagine, this war will cause the price of many commodities to go up. For example, recently, oil surged past $100 per barrel, with some people predicting that it could go as high as $130 per barrel. Besides oil, you can also see that in this 1 week alone, many other commodities have gone up in prices. And what this means for you is that eventually, everything will become more and more expensive, on top of the 9% GST that's coming soon. For example, your electric bill will become more expensive because 95% of Singapore electric is generated using natural gas. Also, if you own cars, your petrol will cost a bit more. Oh what? You say you don't own cars? Oh, no worries. You can expect taxi to increase their prices too. Your computers will cost a lot more now. Even your bread will become more expensive. Next, due to the pandemic, things have already become more and more expensive, aka inflation. The pandemic has already led to higher pent-up demand, worker shortages, and supply chain disruptions, causing the inflation to shoot up to like 7.5%, the highest since 40 years ago. With the war, inflation is just going to get a lot more worse, with some people predicting that the inflation will go as high as 10%. Now, even though the US is not directly fighting the war, they have been providing millions of dollars of military aid to Ukraine, stuff like transportation, weapons, food. On top of that, they are also looking for approval to provide another $6.4 billion in aid for the war. And all this will just add on to US spendings, which will cause inflation to go up even more. So how? All along, Fed's response to fight inflation has always been to increase interest rates. They be like, oh, inflation up increase interest rates lor? So simple. When the Fed increase interest rates, the cost of borrowing will become more expensive. People will then save more money, which would then slow down inflation. Now, here's the problem. Even though inflation is expected to go up even more due to the war, the Fed can't just raise interest rates too fast because it would shock the market. In the past, when the Fed raised interest rates too fast and furious, it will sometimes lead to a recession. For example, in 1980, interest rates shot up to 18%, or mini recession, 1981, interest rate shot up, recession. 2000, increased interest rate, recession. 2007, increased interest rate, recession. Goldman Sachs have also found that when interest rates rises too fast, the market's return will drop or even give a negative return. Before the war broke out, analysts were expecting Fed to increase interest rates by 0.5% in March. But now, they are expecting the Fed to play safe and only raise interest rates by 0.25% in March. This is obviously good news for the stocks because companies will then be able to borrow money cheaply for a while longer. But the downside is that inflation will continue to be high for a while. Next, let's talk about the market. A study found that in the past, before the war breaks out, the market will usually go down. But after the war starts, the market starts to recover. Guess what happened? In the weeks leading up to the war, S&P 500 fell by almost 12%. And the day Russia invaded Ukraine, the market be like, this is fine, and started going back up. But why did this happen? It's because of uncertainty. The market hates uncertainty. And whenever there's uncertainty, the market be like, sell ah! But once everything is certain, in this case, the war has happened, the market be like, meh, and continue going back up. Now, of course, I'm not saying that the market has already bottomed. There can be many other things that can cause the market to go back down. Like maybe inflation goes up even more than expected, more countries joining the war, robots take over the world, aliens come visit us, and many other black swan events. So then, how should you invest? Okay, let me show you some data, because science. Throughout history, there will always be something bad happening. This war is not the first, and it will definitely not be the last. But throughout it all, the market has always gone up, because stonks. There has been 26 corrections since World War II. The average drop is only like 13.7% and have taken 4 months to recover. Oh, guess what? Right now, the market has already dropped by 12% year to date. Even when there's very bad news, on average, the market still gave positive returns. Here's another one. During times of wars like World War II, Korean War, Vietnam War, Gulf War, the market gave positive returns. But why like that one? Okay, let me give you simple investing 101. Benjamin Graham once said that in the short run, the market is a voting machine. But in the long run, the market is a weighing machine. And yes, the weighing machine will weigh everything correctly, unlike some supermarket. In simple English, in the short term, traders and apes from Wall Street bets will control the stock price. But in the long term, what drives the market is companies' earnings. If earnings is good, yay, the stock will go up. But if the company lost money, oh, the stock will go down. So simple. The reason S&P 500 has gone up over time, despite all the bad news, is that overall, the company's earnings have gone up, with the median real earnings growth around 8.6% over 30 years. So the question is, what is the long-term effect of this war on companies' earnings? Yes, earnings will drop in the short term due to higher interest rates and supply shortages. But majority of US companies don't really have a business in Russia. In fact, the combined revenue exposure of the S&P 500 to Russia and Ukraine is only about 1%. So you can expect that this war will only have a small impact on S&P 500 over the long term. Next, let me show you something interesting. At the top, you have the S&P 500, and at the bottom, you have wicks, which measure how scared investors are. And what you can see is that whenever there's very high fear, it usually means that the market is about to reach its bottom. And right now, the wicks is slowly climbing back up again. What this means for you is that when you are feeling super duper scared, it's actually a very bad idea to sell. Because if you sell, the guy be like, he panicked so, pump it. And you'll be missing out on all the gains. So even though Putin destroyed many buildings in Ukraine, the important thing to remember is don't let Putin destroy your goal to what big. Instead, use this opportunity to buy more stocks at a huge discount and trust that the market will eventually go back up, like it has always done in the past. Unless World War III comes along, but that's a different topic altogether. Okay, even though I showed that wicks chart earlier, it's actually super duper difficult to time the market because no one knows where it will go in the short term. So don't do it unless you are hardcore. Only he can time the market, not you. The best thing to do is still the usual stuff that I keep saying over and over again in the past until I'm also starting to feel very sian. And that is buy good stocks, dollar cost average, and over the long term, you will do well. So anyway, that was a quick update of the war and how it will affect everything around us. But do let me know, how are you investing nowadays? Are you buying the dip or are you waiting for the dip to get deeper? Anyway, like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.